Hey there, Jorge Montoya with the Montoya Mortgage Team, and we're back at it again. I've said this before, I am a data junkie. That's how I like to make my decisions. I like to research and then make an educated decision based on my research. And today we're gonna have a conversation around the Zillow report that's titled Home Prices Kept Falling in January, Reflecting Soft End of Year Home Buyer Demand, the January 2023 Market Report Preview. So if you're like me and you like to research and read, in the description of this video, we're going to give you the link. This way you could take a look for yourself, as it's got some interactive data that you can take a look at for yourself. So let's get right into it and talk about some of the key points that this market report preview talks about. So at first it starts saying that the typical US home value fell slightly from December to January by 0.1%. As home buyers awaited fresh listings. U.S. home values are still 6.2% higher than a year ago. And that's something that we're seeing in many markets to be a challenge. Home buyers are awaiting fresh new listings, but what's preventing that from happening at the moment is that many would-be home sellers are locked in very, very low mortgage rates, especially compared to mortgage rates today. So if you think about it from a seller's perspective, you may be locked in on a 30-year fixed loan at 3%, and maybe you do have the need to buy something bigger, or you're relocating, but you're really thinking twice on whether you're wanting to pay 6% plus with today's mortgage rates, and that's preventing more inventory from coming onto the market. But what I would say to those would-be sellers is, hey, the market is the market, the rates are the rate. However, depending on what area that you live in, for example, I'm filming here from Nevada, and in cities like Las Vegas and Washoe County, Reno, Nevada, here where I live, we have the ability to negotiate. So many families, even though rates have risen, sometimes they're paying 1%, 2%, or 3% below market because right now you've got the ability to negotiate. So yeah, you might have to give up some cash at the time of sale, but you would then go and negotiate at the time of purchase in order to kind of make up for it. So something that many families are not aware of. I think many people hear the 7% headline, which is true, rates are climbing towards 7%, and then they just kind of give up the search and don't research it further. So another key point that talks about is that Las Vegas home values fell amongst the top 50 in the markets, 1.2% month over month. So many larger cities are seeing loss in value and loss in sales. So in the description of the video, we'll give you the link for the Redfin report that digs a little bit deeper on which cities are seeing the biggest decline in home sales. Another part that this report talks about is home values were lower than last January in 7 major markets, with San Francisco experiencing the biggest drop of 4.9%. So San Francisco is seeing quite a big drop, and one reason could be that is a tech city. And now post-COVID, many of those tech jobs are jobs you can do at home. So people are starting to, or have been relocating to different areas of the country because they can still perform their work from home. Now, one big thing here, there were 16.7 fewer new listings than last January and 28.8% fewer than January 2021. So going back to what I said a few moments ago, I believe one reason for that, a couple reasons, is rising rates and current home sellers being locked into very, very low, historically low mortgage rates, which makes them think twice whether they want to sell or not. However, despite fewer new listings, active inventory climbed 19.4% year over year, which is an increase in January, while homes were lingering lower in the market. So still, inventory remains 11.3% below January's 2021 first level. So home sales are still happening, more in some areas versus others, but sales are still happening currently year to date. Now, newly pending listings were down 20% year over year, and 31% down from January 2021. So not to belabor the point, but we talked about some of the reasons why that happened. And another thing that's started to drop, which can be good and bad, is rents. So rents have been going down and they fell less than 0.1% month over month. and they're halting a 3-month streak of measurability falling rents. So the typical US rent is now $19.70. So that's just an average. But for example, here in Washoe County, where I live in, rents can surpass a couple $1,000s a month. So this is also motivating some people that maybe didn't have the desire to own real estate, but now when you're paying $2,100, $2,200, $2,300 a month, now they may consider wanting to buy. So having said that, we'll give you the link of the report here. It's got some interactive charts that you can take a look at the different markets on what's going on with inventory, listings, and newly pending home sales. And as always, if you've got any questions, please feel free to send us a private message, give us a thumbs up, and we want to interact with you. Give us your thoughts. What is your thoughts on what's going on with the current market? Until next time.